Ron, thank you very much indeed for joining us. Your notes say this was the fastest correction since COVID as well. Speed kills, warning of behavioural inflection point. Are we going to rally from this point?
Yes, more than likely. The question is, though, will it be a buy on the dip or a dead cat bounce? And certainly we do see an oversold market that does suggest upside ahead, but maybe not to all-time highs. It could be led by high beta quality stocks, those that got hit hard on the downside, now bouncing back. But essentially, we should be looking for potential downside risks ahead.
Let me ask your question back at you. You said, yes, we're going to rally from here, maybe not to all-time highs, but could it be a dead cat bounce? So is it a dead cat bounce or not?
The evidence is suggesting that it will likely be. We have to wait for the market to play out, but certainly the speed of the move is the first clue that this could be an echo of things to follow, along with the actual sector rotations, the concentration risk that remains, but ultimately how the market proves out whether or not it can push back higher, back above the long-term 200-day moving average, which most of the major indices have broken below. So that's probably the best line in the sand for us to watch.
You've highlighted speed there a couple of times, and as I look at the chart, I can see that speed as well. I was looking at this last week, and I think it was quite extraordinary. The speed, though, could be accounted for the fact that everybody was in the market and everybody was in US equities. And when you move to one side of the boat, as soon as anyone's spooked, then they start to rush in the opposite direction. We've seen that, and we've seen another narrative around European stocks as well. But we were told Friday that, look, we may have seen a little bit of excess get into that European trade when the reality is it's going to take a while for some of the European initiatives to be delivered. And you can even see that on the foreign exchange trade over the weekend. So could the speed be explained by the positioning argument? So is it anything to worry about at this stage?
Well, certainly at such overbought extremes, record gains year on year, that unwind is healthy. And that does explain what we've seen. Its speed also, along with the market kind of daily volatility, which is rare and usually seen at market tops. What makes me a little bit more concerned about the downside is both the momentum extension, the rotation fragility, but then also the actual bearish timing confluence that we're seeing on our timing models. And that suggests further downside risks ahead, but of course we still have to wait for the market to prove out. On the outflow side, I do want to make the point that there has been an outflow rotation into Europe and China in particular, especially China tech, but actually it's been cross-asset evidence. So we're actually seeing more into gold, treasuries, and potential other safe haven moves.
Some safe haven breadth. Ron, you've got another chart for us, and you call it Election Playbook, a tale of two stories. We could almost just rebrand this Tesla as well. So just get into what we saw in terms of positioning around the election, and then, of course, what has come next.
So this is building on the thesis at RWA of a two-stage pattern: buy the rumor, sell the fact, in terms of election result itself, which was mostly expected, but then more importantly the inauguration day, where typically the unwind happens both in terms of profit taking from a very extreme bull market, but also the well-known 100-day policy test, which this year more than any other election has been a stress test of sorts. Now, the update to this chart is showing that we had a massive deviation to the downside in what is normal in an election year, but also that there are two paths ahead. One of an incumbent leadership versus first-termers. Now Trump serves as a hybrid of the two, being a previous incumbent, new challenger. And typically the difference in the two in terms of market impact is confidence. But as we can see with some of the economic growth concerns, more specifically tariff uncertainty, and then this rapid fire that Steve was just talking about at the start of the show, is clearly on investor minds, and creating that uncertainty is creating market volatility, and it's a difficult environment for people to make decisions.